On today's episode, we are gonna take a look at FSLY. This company has dropped a big amount from its all-time highs, and we gotta see, is it a time to buy right now? So today's episode is gonna be broken down to the following. First, we're gonna take a quick look at an overview of what the company does. We're gonna take a look at their most recent earnings, some of their financial numbers, and we're gonna end with my thoughts. Like always, if you're new to the channel, make sure to hit the subscribe button and don't forget to hit the thumbs up. It helps the channel out so much and I truly appreciate it. My name's Jose Najarro. By day, I'm a senior electrical engineer, but by night, I'm a self-taught investor looking for investments to do long-term holdings. Remember, none of this should be taken as advice as I am not a professional. And before we go any further, go down to the comments and let me know, what are your thoughts on FSLY? Are you buying? Are you selling? Are you holding? Or are you looking at other CDNs or other cloud stocks right now? While you're down there, you should also see a link to my Discord channel. It's free to anybody that wants to join. And we have great members, over 1,000 members right now. And I post every time I buy and sell there. While you're down there, you should also see a link to Webull. If you sign up and follow that link, we can both get a free stock. Sometimes they even do specials where we might get more than one stock. And what's better than a free stock? So like I mentioned, today, FSLY, ticker FSLY, stock price for the day ended about 3% up, is sitting at $71.61 with a market cap of about $8.13 billion. Year-to-date returns are about 233%, but it is down about 44% from its all-time highs that it hit sometime here in October. That's a huge pullback. We can definitely see that pullback, but it's definitely sitting around those levels. So now let's take a look at what FSLY does. So FSLY pretty much helps people stay better connected with the things they love. FSLY's Edge Cloud platform enables customers to create digital experience quickly, securely, and reliably by processing, serving, and securing their customers' application as close to their end users as possible. What FSLY does is, let's say you have an application. This application is pretty much a car, right? Let's say the application is a car. And if that car can run as smoothly as possible. But if it's not in a road that's straight or that's smooth, no matter how well that application is developed, it will see some slowdown because of that road. So what FSLY does, FSLY is pretty much that road where your application drives, and FSLY makes sure it has the smoothest and straightest road. So when your application needs to do something, when it needs to interact with their consumers, with your consumer, it gets there as fast as possible. So some of the customers they do have, we saw BuzzFeed before, New York Times, they have Pinterest, Fubo TV, Yelp, they have Stripe, and Big Cartel, New Relic. So they definitely have a decent customer base. Now I want to take a quick look at technicals. Technicals as a long-term investor is not something I focus when opening a position, but when adding into a position, I like to make sure things aren't overextended. We can see first thing we can see is definitely not overextended from its charts. It's pulled back a nice amount, and it's sitting at this huge volume price where a lot of movement has happened in the stock price, and it's been somewhere between the mid 70s to the high 80s. So that's where we're seeing a bunch of volume coming in. That tells me that a lot of buyers were moving there. So it's kind of building a form of support within those levels. Now let's take a look at the revenue. The revenue of this most recent quarter, which ended September 30th, was $70.6 million, and this was up 42% compared to the same time last year. We can see though is FSLY is not profitable right now when we take a look at GAAP earnings per share, and it's actually gotten worse compared to the same time last year. Let's do a little more in depth on their earnings. Quarter 3 non-GAAP earnings per share were -4 cents, which missed expectation by 3 cents. GAAP earnings per share were -22 cents, which missed by 10 cents. So they're not profitable neither in non-GAAP earnings or in GAAP earnings. Like I mentioned, that revenue was up 42.6% compared to the same time last year, but it did miss expectation by about $35 million. Total customer counts this quarter increased to 2,047, and that's up from 1,951 in quarter 2. So they did see an increase there. They also saw an increase of total enterprise customers, which make up about 88% of total revenue. And this total enterprise customer count grew from 304 to 313. One of the main reasons they missed on their revenue, and they missed it very little, is because TikTok was their biggest single customer base. And obviously with all the tension that's happening in the United States and TikTok had less traffic. and Fastly gets paid by traffic used. So if there was less traffic, obviously they get paid less. And that's what ended up happening with TikTok. They're saying that this decrease is going to progress as for next quarter as well. But they did give guidance accounting for this decrease as well. Guidance for quarter four was $80 to $84 million. The overall consensus was $82 million, so they're right in between there. They do expect a loss of 8 cents to 12 cents when the overall consensus was a 12-cent loss, 2-cent loss. So they're expecting a bigger loss than what was overly expected by the analysts. So this is another reason stock price is driving down. For the full year of 2020, revenue is expected to be $288 to $292 million, where prior consensus was $290 to $300 million. So they kind of pulled back the bit on the revenue growth, mainly because of that TikTok damage that's happening, but we're still seeing customer growth, and we're also seeing enterprise customer growth. So it's definitely a reason why we see a shift in that stock price, but is it really worth it? Next, I want to take a closer look at some more in-depth of their recent earnings. They're coming out with two new products. The first is Secure Edge. They did recently do an acquisition with Signal Science Integration, and again, this is it was a great move for Fastly on doing this. It helps improve their overall security platform. And there's, even though Signal Science had a small amount of revenue, they're seeing kind of cross-sell between customers. So the people that were using Signal Science, those customers are moving into Fastly, and the ones that are using Fastly are moving into this Secure Edge. So it was a great integration, and they're seeing that cross-sell, which is great news. The other thing is Compute at Edge is their second product, and it has just moved out of beta. They did receive great feedback from their customers, so that's another great news. And the third big update is they joined a partnership with Google Cloud. Now under this arrangement with Google Cloud customers can now purchase their Edge softwares, their Edge offerings as part of their modern tech stack. And this is a 6-year programship, so this is pretty good. People who use Google Cloud now will able to see Fastly's product there and can order it already there. So it helps bring new customers to Fastly. And before we go down any further, you should also see a link down there for 7investing.com, where every month they recommend 7 stocks for only $17 a month. If you use my link or promo code Jose, J-O-S-E, you get $10 off your first month. May I say, yes, this is an affiliate program, but I use their services and would recommend it to anyone. Fastly is expected to grow 25.1% on average for the next few years. That's a hyper growth to me. We can see though is they're not expected to be profitable anytime soon, and that's something that I'm not liking too much. But with that revenue growth, they'll be able to at least increase that and hopefully end up with positive cash flow from operations as the years progress. Next, let's also take a historical growth. Like I mentioned, this most recent quarter, they saw about 42% growth. The quarter before that, they saw over 60%. And the past 4 to 5 quarters before that, they saw over 30% growth. So we can see this is definitely a hyper growth stock for the future and has been a hyper growth in the past. If we take a look at their margins are in the high 50s. Very good. There seems to be an uptrend there. But we can see they're not expected to be profitable anytime soon. I don't see any real trend of improvements in their profit margins. Now, if we take a look at their balance sheet, they have about $380 million of cash and about $100 million in current investments. So about $480 million of quick cash. This is enough to pretty much pay off their total liabilities. They only have about $27 million of non-current debt and about $6 million of current debt. So they have about almost over 12-to-1 cash to total debt ratio. So this is a very strong balance sheet, but it has to be strong because they're not profitable right now. Next, I want to take a look at their cash flow statement. One thing we can see is the cash flow from operations has been negative until this most recent quarter when we're taking a look at trailing 12 months. And that's another thing I'm not liking, but at least it's improving. So hopefully as the quarters progress, we're going to see positive cash flow from operations from now on. So we can see operating cash flow margins finally hit positive margins in the trailing 12 months. Free cash flow margins is still negative. So now let's end with my thoughts. My thoughts right now, what I like about Fastly, they have strong revenue growth, right? We saw this quarter do 42.6% compared to the same time last year. Revenue growth for the upcoming years is also expected to be strong at 25.1%. They have a very strong balance sheet, enough cash to pretty much pay off their total liabilities multiple times over. They're also doing strong acquisitions with that Signal Science and are releasing new products, and that partnership with Google was pretty cool. What I don't like, there's a few things I don't like about Fastly. The first thing is valuation is at 20.7 when I'm looking at forward price to sales ratio compared to 2021. That is a lot higher compared to where it's been in the past, been about 12. But it has done a nice pullback. Look, it went all the way up to almost 50. So there has been a pullback. I do think valuation right now is a bit rich, but not as rich as other software companies out there. Another things I don't like is this company has not have a history of positive cash flow from operations, and the free cash flow is still negative when looking at trailing 12 months. Again, it's not expected to either be non-GAAP profitable or GAAP profitable at the end of the years. So now let me talk about what I would do. How would I play Fastly? So Fastly is another one. If I didn't have exposure right now, I wouldn't mind opening a small position to get skin in the game. But if I already had a heavy position, I wouldn't purchase any at the moment. If I had a small position, right now would be another point where I wouldn't mind adding on so much. For me, I'm happy with my position. Maybe I might add a little bit more, but it's not anything I will increase my portfolio dramatically right now. Like always, I hope you guys enjoyed today's episode. Make sure to subscribe. Make sure to hit the thumbs up. It helps the channel out so much, and I truly, truly appreciate it. So take care, guys. Have a good night, and see you next time.